After personally testing over 500 indicator combinations across every market for the past 8 years, in this video, I'm going to show you the 4 indicators every serious trader must have in 2025. In fact, when you combine all 4 together, you create a complete trading system that handles everything from entries to exits with surgical precision. The first indicator on this list that every trader must have is Supertrend Confluence Signals. To add it to your chart, head over to TradingView and click the Indicator tab. Search for Supertrend Confluence Signals and select the one by Algo Alpha. Now, what makes this indicator so powerful? It's the ability to combine trend direction, volume dynamics, retracement detection, and multi-time frame analysis all in one indicator. First, you've got the classic Supertrend foundation using ATR-based bands, green for bullish trends and red for bearish. But here's where it gets interesting. See this volumetric histogram? These gradient-filled bars anchor to the Supertrend bands and scale based on relative volume. This shows you exactly how much institutional capital is flowing into each trend move. So when you see tall, bright histogram bars during a green supertrend, it means smart money is confirming the move. But that's not all. Notice these small arrow signals appearing along the supertrend line? These are retracement markers which appear when price pulls back toward the supertrend level, but respects it without breaking through. These pullback zones are your golden entry opportunities for high probability continuation trades. And wait until you see what else this indicator does. See this multi-asset trend table in the corner? This displays trend direction across 5 different symbols and 5 different time frames simultaneously. That's like having 25 charts open at once, giving you instant macro to micro alignment for maximum confluence. Green triangles mean bullish across that symbol and time frame, and red triangles mean bearish. Now, when all 5 time frames show green triangles for your main asset, you know institutional money is aligned across all time horizons, your highest probability long setup. The rule is simple. Only enter when at least 4 out of 5 time frames agree on direction. Anything less, and you're fighting conflicting institutional flows. This indicator works great, but here's the problem you'll face. You can watch maybe 2 markets manually. Meanwhile, you're missing massive moves in 10+ other markets every single day. That's why hundreds of traders in our community switch to automating proven strategies like these. So while they're watching one chart, the system just caught setups in gold, NASDAQ, the Eurodollar, and other markets, all at the same time. The best part? The strategies are fully automated. So if you're tired of trading alone and missing trades, click the first link below to join our community and see the automation in action. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. But knowing the trend with volume confirmation isn't enough. You need a way to see exactly where institutional money is concentrated at specific price levels, which is why we need our second indicator, multi-layer volume profile. To add it to your chart, head over to TradingView and type in multi-layer volume profile. Make sure you select the one by Big Beluga. Here's why this indicator is different from any volume profile you've used before. Traditional volume profiles only show you one time period at a time, but multi-layer volume profile stacks up to 4 separate volume profiles simultaneously, revealing true market structure across multiple time horizons all at once. Let me show you what makes this tool so effective. First, you've got Profile 1 analyzing the full period, showing you the macro volume distribution. Then Profile 2, which cuts that in half, revealing intermediate term volume clusters. Profile 3, which quarters it, highlighting swing level activity zones. And Profile 4 shows 1/8 length, catching microstructure accumulation. Each profile is rendered as horizontal bars, extending from price, with the width showing volume intensity at that level. But here's where it gets powerful. See these thick blue POC lines? Those mark the point of control, the exact price level with maximum traded volume in each profile. So when multiple POC lines from different profiles stack at the same price level, you've found an institutional grade support or resistance zone. And check this out. At the base of each profile, you'll see delta volume calculations. Positive delta means buyer dominance, while negative delta means seller control. When you see plus 67% delta at a POC level with all 4 profiles stacked there, that's institutional accumulation you cannot ignore. Look for price levels where at least 3 out of 4 profile POCs converge, which become your high probability support and resistance zones. Now, while volume zones show you where institutional money sits, if you can't confirm momentum direction, you'll risk entering too early or missing the move entirely. That's exactly why smart traders combine these with our third indicator, Adaptive Supertrend Oscillator. To add it to your chart, head over to TradingView and type in Adaptive Supertrend Oscillator. Make sure you select the one by Algo Alpha. Now this isn't your regular momentum oscillator. No, this is better. While other oscillators use fixed parameters that fail in changing market conditions, Adaptive Supertrend Oscillator uses K means clustering with machine learning to dynamically classify volatility into high, medium, and low states. Let me show you what makes it revolutionary. You've got the normalized oscillator line at the bottom. Blue gradient for bullish momentum, red gradient for bearish. But the magic is in this data table, which shows volatility clusters. The algorithm is continuously analyzing ATR values and grouping them into 3 distinct volatility states. When the current volatility reads low, with 45 data points in that cluster, the oscillator becomes ultra-sensitive to catch early momentum shifts. And when it reads high volatility, the oscillator automatically desensitizes itself to filter out noise and false signals. This adaptive behavior means you're always trading with the right sensitivity for current market conditions. To integrate this into your strategy, first, wait for supertrend confluence to show aligned timeframes in your direction. Second, confirm that at least 2 volume profile POCS are stacked at your entry zone. Third, check that the adaptive supertrend oscillator shows bright color gradients with volatility cluster reading low or medium. When all 3 align, that's your high probability setup with maximum confluence. For forex pairs, set your oscillator ATR length to 12 and enable normalization. For crypto, drop it to 8 for faster momentum detection in explosive moves. Quick reminder before we move on, you just learned X powerful strategies. But here's the reality. You can't execute all of them manually while living your life. That's exactly why our community of traders automated strategies like this. So they're catching every signal across all X strategies, whether they're at their desk or not, with complete frameworks handling entries, exits, and risk management automatically. The difference? They're trading systematically, instead of hoping they catch the next setup. If you want to see how these strategies run on autopilot, don't forget, first link below and join our trading community today. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. This is precisely why we complete our system with our 4th indicator, Trend Flow Trail. To add this to your chart, head over to TradingView and search for Trend Flow Trail by Algo Alpha. Now, this isn't your standard trailing stop. This is a hybrid system. Trend Flow Trail combines a volatility-based dynamic trail with a volume-weighted money flow index oscillator, creating an intelligent exit system that adapts to both price action and capital flow. Let me show you what makes this tool the perfect exit manager. You've got the Alpha Trail, a dynamic band that adapts based on Hull moving average with volatility smoothing. During uptrends, the trail sits below price in green, automatically adjusting its distance based on current volatility. When volatility spikes, the trail widens to give the trend room to breathe. When volatility contracts, it tightens to lock in profits faster. But here's what separates this from basic trailing stops. See this money flow index oscillator below? It measures buying and selling pressure using both price and volume data. When MFI rises above 50 during a bullish alpha trail, you know genuine institutional accumulation is supporting the trend. But watch what happens when MFI crosses above 80. That's your overbought warning zone. Smart traders start taking partial profits or tightening stops when MFI hits extreme readings. And check out these circle markers that appear on your chart. These are automated take-profit signals. They plot when both the trend and MFI reach extended conditions, suggesting perfect exit timing. For perfect exit management, place your initial stop at the alpha trail line, which will automatically adjust as volatility changes. Take 50% profits when MFI crosses above 75 in uptrends, below 25 in downtrends. Exit remaining position when you see circle markers appear or when alpha trail changes color. For forex, set alpha trail length to 16 with multiplier at 2.8 for optimal volatility adaptation. For gold, increase length to 20 as gold has unique volatility profiles requiring wider trails. Now you've got trend identification, volume confirmation, momentum validation, and dynamic exits all working together. Thanks for watching, and I'll see you in the next one.